The S&P 500 up nearly 20% this year, but some groups have done even better than that. Specifically, consumer discretionary, healthcare, and financials as groups up more this year. So if you had to pick just one, what would it be for next year? Mark Tepper, Strategic Wealth Partners, Craig Johnson, Piper Jaffray. Craig, it's kind of one of those things. We're making you pick one of those three. Which one looks the best to you?
Well, Brian, as I look at just those three things, what I would make an observation of with our work is I'm starting to see a bit of relative strength weakness creeping into the healthcare space. Still see pretty good relative strength in the consumer cyclical space, and that's really kind of improved over the last several months as it looks like the tax bill was going to get done, and that is going to be a boom for spending. In terms of financials, if we can see a little bit of an improvement in the long end of the curve, that would be great. And we're starting to see some response on the charts. If I have to pick one heading into next year, I would pick the XLF, Brian, because we just broke out of a 12-month consolidation range, and it looks like we're going to have more room for that particular index to run.
All right, the financials, there you go. Likes that. A rising rate environment may have something to do with it. Mark, would you agree with that or go with a different sector of those three?
Our pick would be financials as well, so we agree. What we're seeing right now, given the current macro landscape, is we're seeing this very healthy sector rotation out of tech stocks into both industrials and financials. And financials are going to be one of the biggest beneficiaries of both tax reform and this current rising interest rate environment. Now, financials typically have very high effective tax rates that are obviously going to be lowered with the tax bill. You throw in an increase in infrastructure spending, and that should boost consumer and industrial loans, which have been lagging over the last several years. And then, obviously, if the yield curve begins to steepen, that's going to be a tailwind for the net interest margin as well. So we like the financials.
All right, financials getting a lot of love from a fundamental and a technical perspective. We'll watch the Fed, watch net interest margins, we'll watch rates. Thanks for watching. Mark and Craig, and we appreciate you coming on Trading Nation. As always, guys, folks, thank you as well.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.